name is Doug Lowen, and I'm so excited to got some great things to share with you today. I want to talk to you about wealth cycles. We've all heard before, you buy low, sell high. But for how many of you is that a reality? How many of you actually buy at the right point and sell at the right point? Well, in wealth cycles, things and assets go up in price and they go down in price. And if you don't buy at the right time, you're in big trouble. So I want to talk to you about a few different asset classes. The first one that you've all invested in is cash. Whether it's sitting in a GIC, in a bank account, or in a money market fund, cash is a losing proposition. Because of the amount of money that is being printed, our currency or our cash is going down in value steadily. So that is a guaranteed to lose. Your cash will not keep up with the rate of inflation. That is the first bubble that is being created in today's economy. The next one is the stock market, also one that many of you have probably invested in at one time or the other. And if we look at the stock market, between 1928 and 1982, the stock market had very, very consistent growth of about 300%. That could be sustained, and that was very normal growth. But you see what happened? Between 1982 and 2000, the stock market grew by 1,200%. The problem is that the factors that sustain the stock market, namely GDP growth and corporate earnings, were not there to sustain that. Therefore, you had a bubble. The third area is real estate. Again, most of you probably own your own home, or maybe even have investment property and have invested in real estate at some point. And normal real estate growth is approximately 5% per year, depending on where you're at. Now, if you were in a healthy area, for me, for example, between 2005 and 2007, my home doubled in value. The problem with that is that the factors that support real estate growth are jobs, income growth, and population growth into that area. That was not seen in the areas that real estate went up like that. Therefore, real estate was in a bubble, a big bubble. Now, what happens to bubbles? They get inflated and inflated and inflated and inflated until what happens is they pop. Well, the last area is commodities. That's the last of the four asset classes. Commodities, and generally, today I want to specifically talk with you about gold. Between 1974 and 1980, gold went up 2,600%. This was after gold was removed as a backing to our dollar. It just went through the roof. How many of you would have liked to invest in gold at $35 an ounce and had it, sitting at $850 an ounce 6 or 7 years later? Between 1980 and 2000, gold dropped about 50%. Again, not the time to be in that because of the wealth cycle, and it was obviously the time to invest in the stock market at that time. Today, gold has risen about 500% in the last 12 years, and it is not done yet. But what I want to talk to you about is there's four bubbles. So each one of these is in a bubble. The last thing that the government wants is for these balloons to pop. They do not want them to pop because that loses confidence. People would no longer vote that government in. So what is the government going to do to sustain those bubbles and just make sure that they do not pop? Well, they've got their own bubbles. The first one is public debt. The government will borrow and borrow and borrow until they can no longer borrow. So they are going to make sure this public debt grows to sustain the bubbles in our asset classes. And the other one is another large bubble, and that's the bubble of printing money. See, what's happened is quantitative easing is fairly new definition, a new term on the books. Quantitative easing is printing of money. The government has the power to print their own money, and they will just continue to print and print and print. So what we have here is we have two very, very large bubbles. And the government is going to continue to inflate these until they can no longer, and until these ones themselves will pop. Now that is a day that I do not want to see, but it's coming. Because in order for them to make sure that the people do not lose confidence and the bubbles pop, so the cash bubble pops. Next, the stock market bubble pops. Well, suddenly the real estate market, as we've already seen, it pops. And then the commodities market pops. That creates problems. So what do you need to be aware of as an investor? You need to be aware of the correct time to enter an asset class. When is the time to buy? When is the time to sell? The most exciting thing for me is that the ultra wealthy, they do not invest in asset classes that go down in value. I had a billionaire say to me once, the reason I invest in rarity economies of rarity, which is certain commodities, which I'm not going to talk to you about today, is because they don't go down in value. How would you like that? Instead of having to worry about the correct time to buy and sell, you invest in things because they don't go down at all. Thank you so much for watching. I encourage you now to go to www.freedomps.ca, where you can join the Freedom Fighter Network. Here you will get weekly articles and videos encouraging you on your road to freedom, not only in your wallet, but also in your whole life. As well, you'll be able to download a copy of 5 Key Steps to Abundant Financial Freedom. This is a free chapter from my up-and-coming book. Very excited, so take care and God bless.